Good afternoon, everyone. It is high noon, Monday, September 15th, and I am Bagadon. We are stockmarketcaddy.com. We are here to trade the markets each and every day, extracting cash flow from the money flow, hopefully reducing our emotions of fear and greed by trading algorithmically, trading mechanically, staying patient, staying patient. Sometimes difficult to do, or many times difficult to do, but it's a must. It is an absolute must. We have a long term view. Yes, active traders with a long term view. If you are thinking that this is some sort of a game, some sort of a gimmick, it isn't. It is an acquired skill set. And if it's something you are interested in and you want to work toward doing it, feel free to visit stockmarketcaddy.com. Feel free to reach out to us, and we're happy to chat with you. We are the first to recognize this is not for everyone. Again, if you think you're going to open up a brokerage account and just simply start buying and selling and selling and buying and just, printing money, well, let me know how that works out. Markets go through phases and phases within phases. So any questions, let us know. We're going to let you watch up until about 1 o'clock today. We're very, very busy this time of the year. We're going to try to punch up a few times a week around the noon hour. That's what we're going to try to do here as we go into the fall. During the summer, we've been on in the morning and in the afternoon, but this time of the year, very, very busy. And the markets are going to be busy. We have the Federal Reserve coming out on Wednesday. Are they going to cut? Are they going to cut 25? Are they going to cut 50? Are they going to cut 100? And what will the market do? The market's going to the moon. The market's going to crash. Well, I'm not sure that either one of those things is a reality. But for us as active traders, it just won't matter. Why? We trade the money flow. So if you're out there trying to handicap what the Fed does, you want to handicap your fantasy football teams, that's fine. Gamble away, but that's not what we're going to do. Not here. Any questions, let us know. We'll let you watch. Good afternoon, everyone. And I am Bagadon. This is Stock Market Caddy, it is 12:06, about noon. We're going to let you watch for an hour. What we're going to try to do, we're extremely busy this time of year as we roll into the fall, into the winter season. This is just that. It's a busy season. This week, by the way, the big news, of course, is going to be the Federal Reserve meeting on Wednesday. Are they going to cut? Are they going to cut 25 basis points, 50, 75, 100? What is the market going to do? Is the market going to crash? Is the market going to run to the moon? Yada yada. So the lead up to these Federal Reserve meetings, particularly one that has been so speculated upon. Usually we see the market flat, tight trading range to up. Usually, and usually whatever the Fed does, and we don't know what they're going to do. We have our suspicions. We won't add too much to it. If anybody wants that opinion, you let us know, but we don't have any inside track, that's for sure. But usually the market will cheer the Federal Reserve. Oh, they got it right. They hit the ball right on the screws or whatever. It's that sort of thing. And then comes the aftershock the next day, or next 1 or 2 days. We're going to let folks kind of find us here a little bit, and we'll take a hard look at where the markets are and the vulnerability to the markets, regardless of what the Federal Reserve does. So for us, we're not trading the noise in the news. We're aware, and sadly so, right? We are aware of the noise in the news, even though we're not trading it. And that's also, it can be a good thing, can be a sad thing, because we're a little bit more dialed in, to events like what happened last week. And but we're not a political channel. We're not, we try to just kind of avoid that a little bit as best I can. It's inherent in what we do. In terms of, I'll just say this. I remember as a very young person, 17, 18 years old. I was 17 when I went to college, and my first class was a poli-sci class, and it was a Marxist professor who was actually pretty good, and he wanted to know in as few words as possible, what is politics? What is it? And for about 45 minutes or so, he let people pontificate, and then when we left, he answered it. And I think he was kind of right. To me, it shaped a lot of what I would do ultimately in college and in life later. We had very different, even though we may have agreed on what it was, we had very different views on what it meant. So I'll keep everybody in suspenders, and we'll ask others that might be coming into the room that haven't heard it before. It is very much what we do here today. Like I say, it shaped me as a very young person. It shaped me in my views, not just in a political sense, but also in a business sense and in a day-to-day sense. And it also certainly shaped how and why we structured Stock Market Caddy. So we'll share that with everybody in a little bit. In the meantime, we are running the 5-minute NQ. MNQ. This is the continuous NQ. We took a profit here to bring us a little bit back to par. We had a little dry down overnight. Let's just take a look at the 5-minute VIX. The 5-minute VIX went long at 10:45, so that's a little bit weird, huh? That that the markets haven't turned down. 10:45, yeah, it's 12 noon. You would think that the markets would have pulled back. So little departure here, divergence. We'll see if it sustains itself. What we would be expecting with the VIX doing this and trending up, that these markets will lose their grips and will pull back here, in at least intraday, providing us another opportunity to get some trades in. The machine will do the trades, at least then. If I intervene and take anything off, I'll let you know. We're going to stay with just 5 micros here early in the week, and we'll have plenty of opportunity to get the job done. We look at the 5-minute ES. It went along at 610 this morning. At 610, you'd be up 1,200 if you're still in it. 635, you'd be up 3,180 if you're still in it. This one is the Dow short at 1120. You'd be up 250. The Russell 1215 long, and it's basically flat. No profit there. Gold, the big story on gold, and we've said, you really aggressive traders can be fading gold when she hits euphoria, but you better be aggressive and disciplined when you take your money off, and then more conservative traders might be better off buying the dip. And if you bought the dip at 8:45 this morning on the 5-minute, you'd be up nearly $4,000. Silver at 940, 1,700, and of course Bitcoin. So we'll let you watch. Any questions, let us know, and we'll see if anybody finds us. We don't really advertise, right? So we're not out. We're not out expecting the masses of folks to find us or to adopt this. Not at all. Trading in the markets is not for everybody. It isn't. It's for a very select few, and those that do find us, if we can help you, let us know. If you're getting it done with whatever it is you're doing, we're the first to say keep doing it, and if you're not, you might want to just stop, look, listen, think it through. So we're going to leave this view up until about 1 o'clock. We'll let folks find us maybe, and populate with any questions, and we'll try to come back in a little bit. Good afternoon, everyone. It is 1 o'clock, and we still might get a little trade off here. So we want you to be able to see it. We're waiting on this little 5 minute, and the machine will put us in. We'll see. We're gonna let you watch, but I may not be here for every minute. We have folks that are in Q schools, and we're attending to our own trading, and we're diversified in what we can do and what we can trade. So don't hesitate if you get a question. And the markets historically preceding a Fed day, which is on Wednesday, a high profile Fed day, generally flat to up. And you might see a little sell off of uncertainty, and then kind of a pause, and then everyone will be waited for bated breath on the Fed day, and usually it will finish with an up day. Um, I wish it wasn't the case, but that's usually it is. The real reaction to the market, the real move, the real will be the interpretation of whatever the Fed says and does the following 1, 2, 3, 4, 5 days. The markets are in a very vulnerable state. Let me just go here and show you. We put the VIX, here on a daily basis. You see we're very, very complacent, and let's put the ES on a daily, and very, very euphoric. A little bit of divergence there, so they're not perfectly matched. So there could be a little bit more concern building in here, as you would expect. The probability that we're going to move back toward the mean grows with every passing day, and especially if we get up here into euphoria. The probability is upwards of 95%. So where would the mean be? That would be a pullback to, it's still quite high because of where we are. We're at 66.71. It would be a pullback to 65, 68, thereabouts. That would be normal and healthy. I'm not saying that we're going to necessarily, get a panic sell-off, but it could, right? Markets overreact in both directions. And when the volatility comes in, it usually comes in quite violently. So we shall see. This long signal on Swing Machine has been for 90 days, kids. 90 days. So if you had bought one mini contract, you made 45 grand. If you bought call options, you would have made that and then some entirely. So, a phenomenal signal, and matched with the VIX selling off 86 days ago. But this thing is long in the tooth. So you just know that. So when we trade, we're trading intraday, but we also have an eye for the higher time frames as well. Swing trading, higher time frames. So it's kind of like a layered wedding cake. And you need to understand what's going on, but more importantly, understand what it is you're doing with whatever monies you have on a given day. What are you trying to accomplish? We play at all levels. So we're going to put this back to a 5 minute, and we're going to let you watch. And let's put this back. There we go. All right. Any questions, let us know. And we're going to probably let you go until 2. We'll see if we get this little signal coming in. It'll automatically go in. It'll be 5 micros. So we're aiming small, missing small, and participating, and see where we be. All right. So any other questions? Who we are, what we're about? You want us to plug anything in? You want to look at anything in particular? Want to run anything by us? Let us know. And we hope you're doing well. So what you're watching is a swing machine. What you may not be able to see is that it's monitoring the NQ, but armed on another screen is the MNQ with loaded up to fire 5 micros, long or short. If this triggers confirm short, if this gets short and we see this whiteness here with a 2 in there, that means it's confirmed. You're going to see those 5 micros get in there and go short. You can see the ES getting short right now at 115. You have the Dow short at 1120. You have the Russell getting short right now at 115. This one could be. Don't act on this. Don't trade off of this. It doesn't, we're not here to hand out fish. It does you no good anyways, right? If that's what you're doing online and chasing this, chasing that, it isn't going to be any good. You want to be able to learn how to fish so you can catch your own fish and feed your family, right? So that's what we're about. We look at the VIX, and yes, the VIX is trending long and been trending long for 1045. So it's unusual that the market was just drifting up here and not reacting to that. We think it will, and we think it is happening right here, right now. But we'll see. We'll let you watch, and you can see the trade going in, and just know it's not me pushing a button. It's a machine saying, I see this, I see this, I see this. Boom, boom, boom. Swing machine has about 800 lines of code. Boom, I'm taking the trade. Now, once the trade is in, the machine is going to continue to monitor the algorithm and make decisions around it. But you're still free to make decisions. Now, whether or not you have the acquired skill set, to make the best decision, that's something that we're always working on. Just like golf, you will never be done, right? I mean, look at, the professional golfers, right? They're still playing the game. Everyone is looking to play that, that perfect round. But it won't be perfect every day, every week, every tournament. That's not realistic. So if you're comfortable with uncertainty, you're comfortable with making decisions, you're comfortable with risk taking, not wild-eyed risk, but you're comfortable with risk taking, you're comfortable with uncertainty, and this is something you're passionate about, then this is what we are about. Make sense? Okay, I hope so. And again, we know there's a lot going on in the world and in the markets. That is going to be on the Federal Reserve on Wednesday. We also know there's a lot going on in the world, and we're going to refrain from that only to the extent that when you become an active trader, you, just by virtue of what you're doing, even though we're not trading the news or the noise, you are probably more dialed in than the average bear out there, right? And it can be a good thing and it can be a bad thing. Last week it certainly was a bad thing. I wish I never saw that first tweet. I mean, I saw it instantly. And there was no market reaction to anything as what was, but you hear and see things. Sometimes on Swing Machine, when it's impactful to the market, you'll see the market react, right? And you trust me on that. And it could be anything. There was back some time ago, it was a earthquake in Japan, and it was about 2 or 3 o'clock in the morning. It was like boom. I happened to be up. I was doing some crazy things at that time, and really burning not just the midnight oil, but the overnight sessions. And I was trading currencies, and it was pretty wild. So now we didn't see any kind of a market reaction last week. It's not to say that there won't be, but it may not be tied to that per se. But it might be tied to the Fed. Now, it used to be decades ago. It used to be the Federal Reserve used to just make decisions like over a weekend and tell the market like on Monday. We didn't always have this. So this is all It's a new thing. It's a new regime here. Um, we also used to see sell-offs on Fed Day. Since '08, I haven't really seen much of that. We see it after the fact, but it's almost like, and you have to understand that the Federal Reserve is the titular head, very much a political animal, the titular head of the banking cartel or the moneyed interests. They have a vested interest in protecting it. It's like the queen bee. And this isn't necessarily the best analogy, but it's one that I can think of, and that is this. I spent 25 years of my life in surgery with surgeons every day, wearing a surgical mask before it was fashionable, which, by the way, they're useless, and but that's neither here nor there. Um, Dozens and dozens, thousands of procedures, and in around in huge operating rooms, primarily over the state of Florida, but really in other parts of the country as well. Did I hear codes, you know, codes going off where people were in serious trouble? Um, Maybe in the same room that I was, where I would immediately leave, but only less than 5 times that would ever happen. But in the whole entire suite, would I hear the code? There was somebody was coding, somebody was in trouble, and yes. Did I ever hear or see or know of a person dying in surgery? No, not one. Not one. Because if they get into trouble, they move them out, and they go usually they're moving them out, and they go into critical care, and they're doing it for a host of reasons, namely to save the patient too, but also to they don't want it to happen on the surgeon's watch either. I point to that because the moneyed interest in these markets, they do not want, and that's why they don't like when Trump hits the Federal Reserve. They don't like it. That's their power. That's their domain, and they don't want the public to think poorly of the Federal Reserve. And what would make them think poorly isn't what Trump would say positively, negatively about the Federal Reserve, what anyone says. But if this market was to go down 10% on Wednesday because the Federal Reserve said or did this, well, the Federal Reserve would be in the crosshairs of the American public. And that I just don't think that's going to happen. Then it might happen later, but it ain't going to happen on their watch. And anyone who believes that the Federal Reserve is apolitical, not political, you know, um, I got some swampland for you, because they're the most political thing going. It's a charade. We're gonna let you watch. It is Fed week, and any questions, let us know. And again, the markets are in a very vulnerable state. So I do think shortly after, I'm looking forward to getting past the Fed for this being. And then as soon as we get past it, it'll be, well, then they're going to cut in November and December. And then we're going to have a new Fed guy, and he's going to cut, and he's going to cut, and the dollar's going to crash, and the dollar's going to go down, and the housing's going to roar, and the markets are going to go to 10,000, and we got funny money. Yeah, maybe, maybe not. We're not, if you're honest with yourself, which I try to be, whatever you're thinking about the markets, make a case for the opposite. Make the best case for the opposite to happen. And then make your decision from there. But if you just buy into one viewpoint, one vantage point, and it's a noise point, and then you just plop down, millions of dollars or your future on that, Good luck with it. I hope red or black comes up, because it could be one or the other, right? Um, but that isn't what we're doing here. It isn't, and it's certainly not what we encourage. Um, if you're making an investment that goes out beyond a year, you've got we do think you got to take in some fundamental analysis if that's what you're going to do beyond a year. Intraday, you don't. I mean, you can be aware of a catalyst that is known, so we know that something, there's a catalyst on Wednesday, but there could be a catalyst in another 15 minutes that we don't know about, that I don't know about, you don't know about, and this thing could light up like a Christmas tree and boom, and then people will be running around with their heads chopped off, looking for what happened, that sort of thing. That's always the case, right? So this is a very dynamic place, an uncertain place, and most people don't want to live in that place. I love this place. I love the uncertainty. For me, it's being alive. Does that make sense? If it does, it's something you're doing, then we're going to be, of doing something that we enjoy, right? And whatever it is you're doing, I hope you're enjoying the hell out of it. When I was in surgery at the time, do I miss it? Yeah, at times I do, but I don't miss. There's a lot of it that I don't miss, but I did enjoy it, right? I actually enjoyed it. It was really different and challenging. It really was. It was thought provoking. But any case, so I hope whatever it is you're doing, it is something that you love to do, something that you enjoy, and it just never, here it's never all done. It's never just perfect. We're always exploring, and so we'll let you watch, and we'll see if what are we waiting on. So this was 4 5 minute segments ago. So this was at 115, and if you took it short with a mini, you're up 112. If you did it with a micro, you're up $10. On a short. It's leverage is leverage. And here on the 1 minute, this was 43 minutes ago. We're waiting on the 5 minute. Now this is monitoring the continuous contract, but loaded on another screen are 5 micros. So if this goes short, it'll light up white. It'll say short, or short entry, just as these are down here. But that isn't the signal itself. When it turns completely red and in this box, the box turns white. You're seeing it down here, for instance. That's actually the signal. Long silver is confirming, and then Bitcoin. Bitcoin is going short right now on the 1 and the 5 minute, which is kind of an interesting setup. Huge leverage down here, though, on this contract. And it is intraday. So if this goes, it'll light up white, it'll say short, and then if it turns red, you'll get a white box here. It'll be a red 2 in here. That would be a confirmation that Swing Machine is saying, okay, yes, we're going short on the NQ, and you're going to see 5 micros pop into the upper left-hand corner, and the machine will manage it from there, and it will let me know, and I'll be watching along with you. And I still have the capacity. Now the machine could exit for a number of reasons, but for the most part, it is set up just to run. And but I could intervene, right? You can intervene. So this is a little bit different than a game of chance. If you sit your fanny down at an Indian casino to play roulette, the guy, you place your bets, and then the croupier, I think they call him croupier. He puts his hand over the board. He puts it out there. So okay, no more bets, and the marble is spinning, and everybody, you can't place any more bets, and you can't take your bets off. You can't reach in and stop the wheel. Pull the marble out. You can't do anything like that. well, you'll get thrown out. They won't let you play. You can do it here, right? You can put the bet on, and you can take the bet off. You can get the machine to put it on, you can get the machine to take it off. And you can get to, try to read. I hate to equate it to roulette, but the little marble, right? What you don't want to be doing is making decisions, though, because Swing Machine, which is our flagship product, has about 800 lines of code, so it's crunching quite a bit of data, more data than I could possibly or humanly watch, certainly on a screen. So that's why we set it up the way that we do. And there's a lot here that can help you make decisions once you're underway, as to whether or not you want to take profit or don't want to take profit. Or I tried not to take the losses, but you could, but we try not to let the machine handle those. This isn't the only product of ours, right? We have about, last count, 65, 70. So we have proprietary, this is a radar. We have other proprietary radars. We have show me studies. We have paint bars. We have indicators for time charts, point and figure charts, classic Renko charts, custom Renko charts, line break charts, range bar charts. There's a lot of different ways to track price action. Intraday, swing basis, investment, radars for options that'll give you and scan for you real time specific option opportunities, tell you what the stock might be, and also based on math, and options are all math. They are, right? I don't agree with Tom Sosnoff on much of anything, certainly not his view of the world. I don't, but he lives in Chicago, and I hope he stays there and doesn't come to Florida. He can stay there, but I do agree with him. And he's traded a few options in his life, and he says, "Hey, options are all math," and he's right. They are. They are. They absolutely are. I agree with him on that. And our option tool will give you a suggested option configuration, defined risk, and if you have some acquired option skill, you don't have to take that suggestion. You could configure it a different way. And as you may or may not know, within options, you can adjust the risk levels, on what you do, that have a direct bearing on your win rate, and most importantly your profit, but your profit factor, and you still want to be tracking profit factor. So different options, a different animal. It isn't that they're easier. I wouldn't say that. It's just a different animal, and we want to be diversified in what we can do, not necessarily just in what we can hold. That makes sense? I hope so. All right. So we're still waiting on it, and she's still, that 5 minute long on the NQ was at 6:35, and if you took it, you would have had a high water mark of almost $4,000. You'd only be up about 2,600 now. The problem is, or the challenge is, if you think you can sit down at your screen day in and day out and make decisions based purely on the money, let me know how that works out. And that's what 90% of the people do. They count on you doing that. They know you want to do that. And good luck. Just let me know, let me know if you do it and you're successful. Great. Now, if somebody comes in and puts their entire IRA account into Bitcoin at $10 a coin, and that worked out for them. Great, hallelujah. And many people make fortunes in bubbles. Absolutely. And we've participated in bubbles, and we didn't play the Bitcoin bubble, but maybe I should have. Um, but we've certainly played in other bubbles, and you can certainly make money in bubbles. Depending upon when you come into the bubble, do you recognize it as a bubble? And there are equally, probably more people, I would say, that come into bubbles not knowing it's a bubble and they lose everything. Now if you lose 50%, in order to get back to even, you got to make 100%, right? So I always ask people too, when they're talking about their portfolios, not that we're not money managers, but I always ask like, well, do you have a stop level? Well, what do you mean a stop level? What do you mean? Well, do you have a place where, a puke point? What do you mean? Well, if you are 50 years old and you have $2 million in the market, and you got a good job, and you're taking the European bicycle vacations, and you're doing it, and the kids are in school, and you got the second home, and good for you. That's great. Now, if the market goes down 10% on your portfolio, you're going to be down 200. You're going to lose 200 grand, at least on paper, if you hold it, right? If it goes down 30%, right? I mean, we can do the math. What if it goes down 50%? What if you have a portfolio that's 2 million and 6 months later it's only 1 million? Is that going to grab your attention? Is it going to make you puke? Are you going to say, yeah, I'm in it for the long haul there, Joe Broker? It'll come back. It always does. Okay. What if it goes down to 700,000? Huh? What if it goes down to 500,000? Oh, I don't never do that. You don't think so? You don't. Now I'm not saying that it will, but you don't think that's possible? Are you nuts? You crazy? What are you going to do then? The bills are due. Now, if you're going to, I'm in it for the long term. I got dividends. Okay. Well, they pay you a percentage of, the price of the stock. They can also change the dividends, but it takes a lot of dividends to overcome that. So suddenly, your retirement plans at 62 or 65, wherever they are, maybe going to be 80. Now, of course, they're going to say, oh, that's good for employment. I mean, but did you want to work until you're 80? Doing whatever it is you're doing? I mean, I loved what I did, right? Don't get me wrong, but, I didn't, where I am, I don't want to be sitting on an airplane flying around every day. I don't want to be driving around. I don't want to be going into a hospital at 3, 4 o'clock in the morning every morning and going into surgery. It was good when I did it, but it's not something I want to be doing now. So I started getting prepared for, when that gig was gonna, go away. Are you getting prepared for whatever it is you're doing? It comes fast, kids. It comes fast. If you're sitting out there thinking, well, when I retire, I'll have 5 million. I'll do it then. Okay, well, good. Maybe you do. Maybe you don't. I think you want to pay attention as you go. And learn as you go. That would be my suggestion on just about anything anyways, right? Because life can throw some curveballs. So we'll see. Now you can see that 5 minute NQ doesn't want to give it up, does it? Don't want to give up that bitch. Don't want to give it up. That VIX is hanging in there though too. So we're watching it intraday. This isn't a daily trade. This isn't a swing trade. This isn't going to be where the markets are going on Friday. We're not swing trading. Now you could, right? Right, we could, load in on Swing Machine. We could put stocks in there and set it to an hourly signal, and an hourly signal isn't going to, just to dramatize a point. Let me come here. Now this still hasn't. Let me put the NQ on an hour. This is going to blow your mind. This is an hourly signal. It went long 193 hours ago. Are you shitting me, Don? No, I'm not. That was on September 3rd at 6 a.m. An hourly signal. And yes, if you took it back then and you still have it with a mini, you're up 16 grand. If you did it with a micro, you're up 1,600. If you did it with 10 minis, you're up 160 grand. But an hourly signal. Now, the next one you might, well, that's what I'm going to do. The next hourly signal, I'm going to go short. Okay. It might last 300 hours. It might only last 5 hours. So it isn't enough, right? You've got to have some acquired trading skill and some money management skill and some expectations. The worst thing and why a lot of times people lose is they don't want to lose. And I get it. They don't want to lose on any trade. So what happens is they set stops so close because I don't want to lose. And they set a stop at $100 to dramatize this. And they get stopped out. And they get stopped out. And they get stopped out. And they're down $300. And then it goes long. And they're watching. They're like, okay, I'm up 100. I'm up 200. I'm up 300. I'm even. Bang. I'm taking my money. They're even. Okay. And now the bitch runs and runs. And it goes up 1,000, 2,000, 5,000, 10,000. But they're out. They took themselves out. It's a trap. It's a mental trap when you're trading the money. That's all I can tell you. And you have to practice it and work with the tools, give you some suggestions around it to get out of the trap. And you have to prove it to yourself. Day in, day out. It will get easier. It will. But a person might have something that's really, really good, and they're killing themselves. It's like an unforced error. They just got one little technique that's off. They're playing baseball and they're a really good athlete, and they just got one little hitch in their swing, or they got one little something, and they just need someone to point it out to them and then cure that problem so that they can realize their best baseball skills. Makes sense? It's like everything else. All right, so we're going to put this thing back to a 1 minute though. And yeah, so she's still dipping around here, but she hasn't fired yet. And we'll put this back too. So there we go. We'll let you watch. When you're trading, you do get to learn a lot about yourself. It's kind of boring, and it's an individual game. It is, and but it's very rewarding, and it's really a hoot. And there's so many other advantages to it because you can do it wherever you want to do it, and we're not in the market as much as you might think. right? You don't have to be, right? We have many of our members that, not only are they going after the profit factor, but they're trying to be in the market for as little time as possible. Because time in the market is a risk factor, right? So, all right, so we'll let you watch. If there's anything you want us to plug in, let us know. If you want us, anything in and around the markets. And we'll see. So we're waiting on, and it just this is very normal. Now also too on the market, I did just see come out. I'm not a big fan of this. Could backfire. Trump has just deposited with the Securities and Exchange Commission, which is his baby, that companies shouldn't be reporting earnings every quarter. It should be every 6 months. Fuck it. Excuse the French. Why don't we just do away with earnings? Let's just screw it. Let's not even bother. I'm not a fan of that at all. Um, but I don't think we should have less reporting on earnings. They could be reporting every day. When I worked for my companies, they knew when I was in surgery, this was crazy, and this even goes back years ago. They knew what I was doing, you know, virtually almost down to the hour, but certainly daily. I'm trying to remember what they called that. We called it the cube, and they could see. They could see. I don't know if many of you know this or not, but now we were. I felt very very good about what we were doing. Right. We the motto of the company was improving, and we actually borrow it here. We talk about improving um, your investment outcomes through innovation. Right. There was a phrase that we used, and I borrowed it. Improving patient outcomes through product innovation. And there was another aspect to it. I kind of forget what now exactly, but that was it. And so we we were trying to improve patient outcomes for the patient, for the surgeon, but also for the hospital. And so there was certainly a business aspect to it as well. It wasn't all. It was clinical, but it wasn't. It almost always was clinical, but there was a business aspect to it too, right? I work for very. I still think so. Very ethical and good folks and good companies. Not all of them were, so I'm comfortable in saying that what I was doing, and but they had visibility, and I had visibility on through a device what they call the cube on where the products were going, literally right down to the hour, but certainly on a daily basis. So this notion that the companies aren't going to report their revenues and their earnings every quarter, they're going to do it, you know, biannually every 6 months. I think that's bullshit. I think the first reaction might be though it might further tamp down volatility. But I think the backlash, if you think it through, um, that might be the knee jerk reaction, but then it might usher in greater volatility. Because you can imagine, you get a company and you're not able to see the quarterly earnings and revenues quarterly, you only see them um, every 6 months. And all of a sudden you see a dramatic fall off. Boom, the stock will go down like 50, 60% in a day. So I'm not a fan of it, but it looks like that's what he wants to do. Sure, I don't like it, but it is what it is. But there's still so much that can move markets. So there'll still be they're trying hard to extinguish volatility, and there's no question about it. If you look at any kind of volatility charts over the last 10 15 years or since '08, it's in a downward slope, and they're trying to, but we still get plenty of volatility for us as traders, and I I think that this long-term volatility that they're trying to do is like trying to hold down a beach ball under the ocean. And right now, they got that beach ball down, about 1,000 feet, and it's about the size of a BB. And when that bitch starts to move and starts to expand, look out if you're not prepared and you can't recognize it and see it, because that son of a bitch is going to be moving like a trident when it goes. So we're up here at the highs. Volatility's at its lows, and we're at all-time highs. So anybody and everybody who's bought the S&P, including everyone who's passed away and in the cemetery, everybody's a genius. Buy and hold the S&P. Don't trade. Everything's fine. Just put your money in the S&P. Go to sleep. Move along. Nothing to worry about. That's all you can do. Anybody trading is a fool. Ba 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 ba. Okay, go for it. Tongue in cheek. We'll see. All right. Interesting times. Interesting times. At 2 o'clock, folks, we're going to probably have to turn down. We need these screens. So it looks like we're not going to get that trade. But look for us, most days. I'm not going to commit to a hard schedule because I can't, but we're going to try as we go into the fall and into the winter season, which is our busiest season. We're going to try to come up around noon. I think that's where we are. During the summer months, we were up quite a bit and early in the morning and, a good portion of the afternoon, but we can't now. And it's just too busy. And we do these sessions to create some awareness of who we are, what we're about, and hopefully invite folks to visit the website and see what's going on and see if it resonates with you. Monthly members are unlimited. Annual members are limited. You must go through what we call a Q school just once. We're going to slow the process down to make sure that it is what you think it is, and that where you are, and hopefully give you some insights as to where your trading is, and then you can get to decide what you want to do from there. And if you do become an annual member, we're going to credit you back 30% of the Q. If you don't, no problem. You're going to learn a lot. You'll be able to take it with you. And if you come back at a later date, you're always welcome back. You just, there just isn't that discount because you're going to have to work harder to get back to where you were, and we will too. So it's a time component there. So it is now 1:54. And at about 2 o'clock, this little short broadcast will have to come to an end. All good things come to an end. We wish you the best, and let us know if you get any questions. Okay, everyone, we're going to have to part ways here. And until next time, we wish you the best, and good luck this week.